There we go. The Bucks are winning right now. How in the world is this possible? What's going on? What's going on, Izzy? Ugh. Yo, my Heat are losing. Yo, come on. You guys gotta do something. Tom, don't even go there. Bucks. What? What up, Raji? What's going on, Gaston? Oh, why do I even have that up? Oh, there we go. What's going on? What's going on, everyone? Welcome in. Probably pull up 2 hours. Yeah, I'll pull up 2 hours. Robot. What up, Wiley? Some days is good, some days is bad. That's really whack. And it's actually with more than one headset. Really weird. Appreciate that, Roger. All right, I guess it's a busy night for everyone, so we'll get started. We'll kind of keep it a little brief here. Just run through a few things pretty quickly. But today was a pretty choppy day for the most part. Welcome in, John. What's up, Jay? So a little bit of a slow day, but that was expected. We had a monster rally to really start this week. Monday and Tuesday was just a monster day. You probably heard Avery say, this was really going to be more so an inside day. And that's pretty much what we got for the most part because today was really just more so chop. I know that early in the morning, Avery was really just expecting a drop to get, actual retracement more so than what we had, going into pre-market action, in which that just didn't happen. We ended up getting a beautiful bounce. We did have a lot of stocks that are pretty much just choppy for most of the day. I know that I was watching Amazon early on in the morning. I was looking for an entry there below 3,500. Ended up popping to 3,530. It just wasn't able to necessarily hold the gains. We saw Tesla get an early $20 drop in the morning. That was a beautiful recovery. Had a nice little news here midday and ended up seeing a nice $20 rally into the close there. So that was a beautiful action. I'll get into Tesla and what my game plan is for Tesla also. But a lot of good plays here. I did take two of the unusuals that came out today, holding GE puts and also SE puts. So those are two that I am holding. I know the unusuals, you do have to be a little bit patient with some of them. Otherwise, you could have taken the 10% right away. I did choose to be a little greedy on those, so I am holding for a bigger move. So we'll see what that ends up doing, how that materializes over the next few days. Especially still thinking about the catalysts that are ahead, having the inflation data that's coming out on Friday, having the Feds next week, also OPEC's week next week. So those are things that you still want to keep in mind. Two scenarios that I'm really looking at going into the data here on Friday is either they're going to continue to push us even higher tomorrow and basically just run us hot and kind of blindside us by that bad data that's going to be on Friday, or the market's really just going to start to feel the fear going into tomorrow, and then that's going to lead us into pretty much pricing in the inflation data that I would expect, and the market's going to continue to hold up off of that inflation data. So, uh, pretty much what I would expect if we're gonna see the fear ahead of time before the data is what's likely gonna happen is we're gonna gap up tonight, despite how well futures are flat. We could end up gapping up into tomorrow, and then we'll likely see a slow decline through the day, and that'll pretty much be pricing in basically a green to red day and pricing in the inflation data that's likely going to be coming there on Friday morning. So that's what I would anticipate is the first scenario. But then, like I said, the second scenario is that we just push north and then we get blindsided by that data, and that's going to be the reason why we end up having a sell off Friday. All right. So that's what I'm looking at here into NASDAQ futures here. And okay, I was about to say, am I tripping out? So we had that little ascending channel. That was that pretty much that rocket that we had this past Monday, Tuesday. We ended up breaking down. The only problem with if you tried to short yesterday was that you got the drop, but it just didn't hold going right into the opening bell because it literally felt like a V-shaped recovery and we were practically flat. So that was one of the issues there. And I know that some of you tried to actually short the market, in the morning. It just didn't give you that opportunity. We saw a little bit of a rising wedge action, a little bit of an ascending triangle formation, which I believe Gaston actually pointed that out, was the ascending triangle that was on futures. And that's when we ended up breaking north just shortly after that. So you see a little bit of this consolidation, which to me is showing a sign of healthy. And we're going to get a nice little gap up there going into tomorrow. And then that'll be where we decide tomorrow morning after that gap up is if we're going to fade, go green to red, or we're going to push north going right into that data. So that's what I'll be looking at. I do have a zone set here in which that's likely going to push us just north here. Uh, I do enter that zone here right around 16,601, in which that would be a massive another leg here. You do have a little bit of a minor resistance right around 16,511, in which I can see us pushing towards that level of 16,511 on Nasdaq future, and that'll be a healthy push going into tomorrow if the market indeed does continue to rally. Otherwise, we re-enter into the lows of what we had this morning pre-market, and we'll likely chop around that zone here of 16,253, and which that low was of today, this morning. So that's what I would expect. Either or, I mean, it just depends how they want to play this going into the data. That's really the question mark right now. Do we end up getting a chop fest pretty much as we did today, but a declining one in which the fear already kicks in ahead of time, or do we just get blindsided? That's really the matter of that. Switching over to S&P Fuse real quick. The only thing that changes here is the fact that if I probably put it out to the 4 hour, as you saw, I ended up having that massive expanding, broadening wedge here that we ended up having. But what I want to point out was that we actually hit the resistance, and this is what I was looking at yesterday evening, was actually going right into the resistance now. That was prior support, if you remember, before we ended up breaking down. This now is resistance, in which I want to see if we're going to get over this resistance point now, or do we continue to hold below this, in which that's going to just continue to be our chop to slow decline going into that data. That's the only thing, but I do like this key spot in which we wicked right into the resistance. And that's when I want to see if we end up getting back over that resistance level. In which, if you think about it, we get over that resistance, we're literally within probably a candle of getting to all-time highs yet again. So that's something to keep an eye on. We get over that resistance, we're looking at 47.40, and we're literally right into all-time highs going into inflation data. So that's something to keep in mind, in which that would be really key. If we're at all-time highs going into inflation data, that literally could signal the next downtrend potentially, in which Gaston that might end up canceling Christmas for you. Just saying, right? But I do like that spot. I want to see get over the resistance. Like I said, we get over that, then we're looking at all-time highs of breaking that. All right. Let me see. Looking into some of the charts that I'm watching. I'll actually look at Amazon first. The reason I'm gonna look at Amazon first is I'll tell you what my game plan is for tomorrow. If you probably heard me say into the close, probably about power hour, I think I said it for Amazon. I'm actually holding a small position in Amazon for the flow, and the chart was just undeniable for me. They were banging 3600s practically all day on Amazon, and I just couldn't resist that. Being that we're over the 3500 level, that literally was just a banger for me. I had to take that play. I just kept it small, and what I'll be looking to do is if we don't end up gapping up as much as I expect, I'll use whatever gains I end up getting tomorrow morning as a cushion to add on any potential dip. So that way, if I end up having some potential gains tomorrow morning and I add on a dip, I'm going to use those gains as pretty much as my stop loss, if we want to think about that. So that's what I'll be watching here. But key level that I want to see us get over is 3560. That's really the key level that I want to see us break over. We get over that 3560, then we're going to see floodgates with 3600 on minor flow that's going to continue to be persistent as we saw it hitting today. So we ended up feeling they were also hitting 3550s. We got close enough to that. They got also 3570s. So a lot of that is still sitting out there, and that's what I really want to watch. If we actually also go out to the monthly chart, you also see a little bit of a ascending triangle formation. I'm just going to clear the chart. But if you see that we have a little bit of an ascending triangle formation here that you can see, in which you have a defined resistance level here that we've just wicked over. So that's one thing to keep in mind here. If you actually looking at, we're literally in an ascending triangle in which this could be explosive right into year end. So that's something to keep in mind. I know that Jar actually pointed out in premium chat about 4,000 calls, a 4,000 strike. It doesn't feel like a stretch, but if they end up canceling Christmas, I would wait for the inflation data on Friday to really point into something like that. But 4,000 calls would not sound crazy at all if we do get a fluid breakout out of this ascending triangle. And we do have these two wicks to be filled here at 37.73 and 37.62. So that'll be two things, two wicks that do need to be filled if that breakout does continue, right? So I did tell you I'll be adding on the dips on Amazon if we get a decent bounce tomorrow morning. And then that leads me into what my short play is for Tesla. And the reason I say short play is not necessarily the fact that I'm holding any short position yet on Tesla. But the reason I say that is because we did have this massive pennant. This is where we entered bear territory. We ended up wicking all the way down towards this 1,000 mark. And then what ended up happening is that now we're going to end up testing as resistance. That's what I'm really watching for. So as we get into resistance here, I'm going to potentially look to short this at 1090. No, there's a lot of buyers out there for 1100. I do expect market makers to really bring us just shy of that 1100 mark. So 1090 will be that level where I want to end up shorting this. And then I'm going to take this right down into the gap fill. I know that Avery was also bearish on this one. I believe we were both targeting right around the 1024 area, 1024, 1022 mark that we were looking at. Even potentially getting down to the 1,000 mark. So that'll be where I end up shorting it. I mean, obviously, we see the news today. We saw a little bit of a relative strength that we ended up having today. Likely get a $15 to $20 gap up tomorrow, in which that leaves us with a nice little push right out the opening bell to get right into that 1090, close enough to 1100 strike. And then that'll be where I end up shorting it. And I want to hold that out at least towards till next week. I want to say going right into the Fed week, into OPEX week, in which we'll see this start to get the volatility start to pick up. So that's my game plan with Tesla, showing you that. But again, targeting is 1090, 1100. So if you're able to scalp that to the upside tomorrow, go for it. All right. Real quick, just scanning over the other tickers I was watching was just Microsoft. I know that Tom actually liked Microsoft a lot. You do have a little bit of an inverted head and shoulders. This right shoulder is a little bit micro, but nonetheless, it is still a valid inverted head and shoulders. You do have a move towards 337. And if we end up breaking over 337, which if we break over that 337, I would likely expect S&P to be pushing all-time highs. And then we'll likely see this push towards 343, which seems a bit of a stretch to me. So I would target this one to 337. The other thing that could play into factor is that you do have a micro little gap fill right here, in which that's 339. So that could be your top off right there, 339 mental number 340, in which that'll really be your top. All right. So that's what I would say for Microsoft. 340 is my target there as the market continues to propel higher. Other one, I believe I pointed out Qualcomm yesterday. I'm going to point it out yet again, only because the chart setup there is still there for me. You had that falling wedge action. It's just today was just another consolidation type day. And I want to see those 2 wicks get filled here, pushing up to north of 186.81 and then filling the all-time highs of 188.77. So this one's still in place, still on my watch list here. Another name was GM. You do have a little bit of a rising wedge action going on here. So I'm just watching this one. If you remember quite a few days ago, I actually pointed out GM as a long-term play potentially setting up. It's not necessarily there yet. But if you actually look, you have a left shoulder here, inverted head, and this is where you're going to be making your inverted right shoulder, in which you're going to get the drop, which is going to give you a broader drop right into the peak of the right shoulder here. So I would expect this rising wedge to play out, and this is something you want to keep on watch if for whatever reason the market does decide to go south. This will be one of those plays where you could potentially get a nice short here, and I'm playing down towards the gap fill here, down towards 58.77. So that'll be a beautiful one. I do love this one long term. Yet again, that's why I brought it up early in advance to show you how it was going to necessarily play out. and I even had that 58 level in play. So you're watching that 58 mark to really go long on this one. That's where I'm potentially looking at to go long, and that'll be a long-term portfolio play right there. But other than that, right now, short term, next few weeks, I want to say for that matter, you're looking to get a nice short right down to the 58 mark, in which that could actually be filled within a matter of a day if the market's red. All right. So that one's a good short play there. Watching Penn, this one's just a low key name that I'm watching. I know that this one's been beaten up a lot, but you do have a nice little falling wedge action. You actually got a nice little breakout right here. Watching two key levels here on this breakout is getting over 54.08, and then overall targeting this move to 58.30. So I'll watch this one. I know it's not a very popular name right now. No, a lot of growth stocks just dying overall. But nonetheless, I'll keep it on watch. We'll see how it ends up going. Another name was Mastercard. I actually tweeted about this one. And the reason I ended up tweeting about this one was because of the monthly chart for that matter. And the reason because of that is a key level here that I actually noticed on the monthly was that this was a very key level when we broke down, and that was 344.68. So that's something to keep an eye on. We get back over that 344.68 level, and that'll be a beautiful move to the upside here. So that's one to definitely keep an eye on. I actually have an alert set on this one. You see the little green clock. So I'll see it once it breaks over that 344.68 mark, and I'll probably be in there for calls. Just wanted to point that one out. And then the last one was just pointing out Roku. Roku had a beautiful move. I know that Avery got in that one just a little bit earlier, but he ended up re-entering right on the break of the high of the day. So that was a beautiful move that we got out of that. Did any of us actually anticipate that it was going to push that high? No, I did not. I think 250 was pretty much the top that we all had. But watching this one for continuation is the middle peak here that we ended up having when we had this double top formation form is the resistance that you're going to have at 272. So if we end up getting a continuation, that's the level that you're watching for a hard resistance is at 272. And that'll likely be where you see the selling pressure start to build into this one. And they're going to force it back down. All right. But other than that, that was the list that I'm watching. I mean, my primary two watches are Amazon, having a position, possibly adding, and then shorting Tesla close enough to that 1100 mark tomorrow, as it still has room to the upside. All right. But other than that, let me look at two tickers real quick from you guys, and then I'm gonna call it a day. Let's see what I got. Someone mentioned Hood. Do I really want to look at Hood? All right, I'm gonna just take a look at Hood. Well, that daily in the monthly chart just looks horrendous. Ew, that's a really ugly chart. Apple. Someone mentioned Apple. I'll take a peek at Apple. I mean, the chart looked amazing on Apple, but I'll take a peek at it. This is just never ending dying. I mean, what do you do with this? I feel like this is when I first looked at Moderna not that long ago. But the first thing I identify is that you have the longest downtrend possibly in history right here. That there's no coming back from that. Right now it feels like they literally would have to have news of some sort to really revive this stock for any matter. But you have a defined downtrend. If I were to tell you where your potential upside is, then you can go as high as 2770. That would be your upside target. But other than that, if you can't break that 2070 mark, then that 2770, then you're going to get rejected and this downtrend is just going to continue. That's literally all you're looking at right there. This is just a horrendous chart, but I expect at some point in time there's going to be some kind of news revolving them, whether it be a reverse split of some sort that's going to actually give them some kind of juice and it's going to end up popping. It's going to pop soon. Let me know exactly when soon is, and I would hope that it's by 2022. Because looking at this downtrend, I don't see yourself coming back within the next week or two for that matter. This thing is just never ending dying. But again, your upside is 2770 right into the resistance of the downtrend. Other than that, I mean it's not going anywhere. Unless it breaks that resistance, it's not going anywhere. Alright. Last one I'm gonna look at real quick was Apple. Someone pointed out Apple for me real quick. Let me see if I look at Apple. I actually mentioned that Apple was gonna go to 176. What was the high of the day? Did we get to 176? Okay, we were just shy of that. I think I called that out, Randy. If you actually were here yesterday, and I literally said where it was gonna go, I think I literally said I didn't need to look at Apple and it was gonna go to 176. I was literally 4 pennies shy of that. All right, I said that last night. I literally said that, and I'm not gonna lie. Actually, let me look at something while you guys are on live here with me. Is this a parabolic curve, or am I just tripping right now? Tom, if you're on live, tell me if I'm tripping about this, because this literally looks like a parabolic curve right now. That's exactly what I'm looking at. Why did my phone go off? All right, my bad. All right, so you have a base right here. This is base one. Well, that's base one, base two, base three, base four. In which case, tomorrow would be your parabolic move right there. If this plays out the way that I'm thinking it is. All right, because this would be your base right here that you end up having. I'll probably put it right here. Yeah, this is a parabolic curve that you have going on with Apple. And I'm surprised I'm actually just now noticing this. So if you end up doing that, this will be your parabolic curve. And tomorrow your target's 180. I'll tell you that right now. I literally told you it was going to 176 today. It fell 4 pennies shy. It's going to 180 tomorrow. So I'm literally telling you that right now. Yeah, Randy, it's going to 180. So this is your parabolic curve. In which case, that was base one, two, three, four, and this is gonna be your parabolic move. So you get another $5 move tomorrow, going into that 180 mark. I won't be I won't be surprised if they fall you just shy of 180. So just a heads up, make sure you secure your profits. All right, but that is a beautiful parabolic curve. I'll definitely be in this one tomorrow, and that actually explains all the Nimbus alerts that we got today. We ended up getting 7 Nimbus alerts today. That was just a beautiful move. But I did like the fact that I ended up calling 176 yesterday night. For, fell literally 4 pennies shy of that, and tomorrow it's likely gonna go to 180. And I will tell you, at 180, I would literally load puts. I'm not gonna lie. If it hits 180, I may end up having to short Tesla and Apple both at the same time, which would be, I mean, not that I want to be a bear necessarily. I sound like Gaston from before, but 180, we all know what happens with parabolic curves. Typically, when you break down from a parabolic curve, you end up getting down towards base three. So, in which case, you're gonna be looking at this zone right here for the breakdown of that entire parabolic curve. So, it's likely that you're coming down towards that 170, anywhere between 171, ranging down towards 169. So that's what I'll be looking at near term once we get up to 180, in which that's potentially about a $10 drop that you're looking at. All right. So that's what I'll look at for that. Other than that, though, I'm gonna call it a night with you guys because I went through quite a bit of charts. So other than that, we'll call it a night here. I'll see you guys on live tomorrow morning, and then we'll see what the market does. Again, either two things that end up happening: we get a gap up and we go green to red in anticipation of fear for inflation data, or they just run us steaming hot right into data on Friday morning, and then we get blindsided likely by a drop. So those are the two scenarios that I'm watching, but we'll see what the market gives us, what gap up we end up having. I definitely wouldn't take a position right out the gate because, like I said, we can go green to red. So wait for the market to really give you a steady movement tomorrow morning out the gate, and then wait for your dip entries to get in on those buys. So I'll be watching heavily on Amazon, Tesla, and now Apple. Shout out to Randy on pointing that one out because that's just a beautiful parabolic curve to watch. So we'll see what tomorrow gives us. Other than that, guys, you guys have a good night, and I'll see you guys in the morning. All right.